Hello, everyone, and welcome back to Milkshakes Markets and Madness. This is a show where we talk about the financial markets, we talk about the madness of the world surrounding those markets, and we do it through the lens of the dollar milkshake theory, which is a framework I came up with to help me kind of understand what's going on in the crazy world and the crazy markets that we're currently dealing with. And for all of you who have been following for a while, you know we've kind of got a new format to the show. We've switched it up a little bit. A couple weeks ago, I went over some charts. Last week, I just gave a really long monologue. But this week, what I thought I would do is kind of bring you behind the scenes on a conversation I'm going to have with a friend of mine who I just think is one of the smartest people regarding what's important to know for the world around us right now. And, he is a guy that I met. I'd known him for a long time and have been reading his stuff for a long time, but I only met him about 6 or 8 months ago. And his name is Michael Every, and he is the chief strategist in the global markets and economics part of Rabobank. Welcome, Michael.
Thank you for inviting me. It's a great opportunity to have another chat. I really enjoyed our first one so much. It's nice now to do this in front of the camera.
Yeah. Well, I thought you would be the perfect person to have this conversation because I know we kind of see things similarly, but you have a different set of experiences than I do. You grew up in a different part of the world than I do. You live in a different part of the world than I do. But I think we agree that markets now are in many ways structurally different than they were, let's say, 20 or 25 years ago. And we've kind of got this intersection of markets, domestic politics, geopolitics, geographic challenges, and they're all kind of running into the same intersection at the same time. And it's kind of a big train wreck. And who comes out on top is a little bit, up in the air. But I think all of those things are important. And I know from reading your stuff for such a long time, one of the things I like about your writing is you're obviously very smart and you're obviously very well educated and you've done a lot of good reading, but you're also not just philosophical about things and you're not tied to any dogmatic religion of economics. And you actually talk about the real world and the way things work in the real world. And I think kind of realpolitik is something that many people either misdiagnose or just misinterpret. And that's what I have enjoyed probably the most out of reading all of your stuff is what's the real world implications of this? It's nice to talk about theory. It's nice to talk about the way the world ought to be, but let's talk about what's really happening. So anyway, I'm really excited to get to talk to you
today. Thank you very much. Those are very, very kind words. And obviously, your work is absolutely brilliant too. I mean, we're both now patting each other on the back. I can't wait to explore, some of these topics in a bit more detail together.
Yeah. Well, I remember reading a piece of yours, and I don't remember the exact date. I think it was either shortly before Trump was elected or shortly after he was elected. And I think it was called The Great Game or The Great Game Comes or something along that line. And it's funny because I just got done rewatching the entire series of Game of Thrones with my son. And it's funny, he turns 16 tomorrow. So, he's kind of in his formative years. And it seems like once or twice every episode, I would stop and I would say, Moses, you're going to learn more by watching this show about how the real world works than you are by sitting in a classroom because, this is not the nicest world that we're watching, but in many ways, this is the way it actually works. And there was one scene where Tyrion, who's one of the characters, is talking to the up-and-coming queen. And he says, are you scared? And she says, yes. And he said, well, you should be because you're in the great game now. And the great game is terrifying. So I was thinking when I remember reading your piece about the great game and, just heard that quote a couple, weeks ago and then looking at the world around us now. And I kind of feel like that is what's going on. The great game is accelerating and, there's certain players that have positions that want to keep them. And there's other players that want to kind of take them over. So, I've been talking quite a bit here. I'd love for you just to kind of give an intro on your work, kind of the things that you think about and how you then bring those into your work at Rabobank and how it helps your clients at Rabobank.
Well, thank you. That piece that you mentioned, actually, I think it's a very good entry point. It was titled, excuse me, The Great Game of Global Trade. And this was just after Trump was elected. And everyone around me was saying, well, of course, he's not going to put up tariffs. You know, he's got elected saying that. And of course, he isn't going to do it. And I said, well, look, let's just take a step back and look at the history of free trade. Now, this is actually, you know, a very popular topic right now. And actually, there is a minority of people who have been banging on about it for a long time, and I'm one of them, but certainly not the first. But if you go back to look at how free trade conceptually developed the way that we see it today, which is let's get the WTO in there and lower tariffs, and everyone trades together, everyone specializes globally in a different part of the value chain, but we all win by doing that because the productivity or the production frontier is pushed forward and forward and forward, and it's a net gain for the world as a whole. That's not how we used to see the world. For the longest time in mankind's history, that's not how we thought things worked. It was a very, very raw competition between, you know, countries or empires over who could produce more than the other of the right kind of goods to push the other one off the world stage. Now, is that a particularly nice way to live? No. Is that a way anyone should want to go back to? Not really. So therefore, you would think, well, we've got a better system now, so let's stick to it. And that's what I was continuously told by people who hadn't bothered reading the history, but knew we didn't want to go back. They always say the 1930s, without having actually read the history of that period. Don't do that. Well, the problem is, as I said in that piece, if you actually go back and look at the theory, not just the history, but the theory of how free trade works, you'll notice that the people who put the ideas together actually say it doesn't work beyond certain parameters.
That's right.
And
that's right.
People overlook that. So, I mean, two quick examples. Adam Smith. Now, Smith said, yeah, free markets, great. We all know that. Shorthand, Adam Smith, free markets. You know, what he actually says, if you really get into the long grass of it, is you need a strong government to regulate, to keep free markets. Because if you don't, you'll end up with oligopolies and monopolies who will basically just be rent-seeking and squeeze the life out of the economy. Where are we today? Okay, so that's one point. And the second one, in terms of international trade, Ricardo, who came up with comparative advantage, which is, you know, very clever and mathematically undeniable, he specifically says in his text, he assumes that capital is immobile. So you can't move capital from one country to another to put your factory and your technology in another location. So he's talking about specialization internally, but trade clears with both sides having a kind of a balance of trade, just making different things. Is that what we see today? No. We see some countries running huge trade deficits and some countries running permanent trade surpluses. So I said, if you look at that, and then you look at the fact that that hollows out the industrial base of the countries that are under trade deficit, and then you look at the fact that the country with the largest trade deficit is the US, and if it gets hollowed out, it can no longer make aircraft carriers and F-35s at volume, you know, in perpetuity. And it's only America, and this is where I know we agree completely. And if you don't have enough aircraft carriers and F-35s, you don't get to stay top dog forever because power abhors a vacuum. The system will collapse. It's as simple as that. And in fact, as I say that, I've just in the last 24 hours seen information that's publicly out there that because of the latest hoo-ha in the Middle East, there are currently no American aircraft carriers in the Indo-Pacific. None. Because you've got 11, 5 of them or 6 of them are currently under repair, and the others have to be in other locations. So what do we need as proof that this is not how you can run the railroad in the long run? And ergo, I said protectionism would come back. It's logical, and history will repeat itself. And here we are today.
Well, I think what was so kind of not only prescient about the piece, because basically what you said was likely to happen is happening, right? Not going to happen, like already has started and is accelerating. But the other thing that I like that you pointed out was that, and you just said it a couple of minutes ago, was that historically, free trade is an aberration. And I think that's what a lot of people forget now too. I think a lot of people kind of think we're in this environment and now we're moving into this abnormal environment or this uncharted waters, when in reality, it's the last 30 or 40 years that has been the uncharted waters, and the protectionism or mercantilism, or however you want to define these previous episodes, that was the norm, right? And so in many ways, I think if people knew history or learned from history, that this wouldn't be a big surprise to them, right? And that's, again, that's that's the interesting thing to me. And then what you were just talking about with Ricardo and comparative advantage, there's a lot of assumptions in these models, right? Or in these theories, and all else equal. Well, in geopolitics, all else isn't equal, right? In global finance, all else isn't equal. And I think one of the things that they assumed would always be equal is, number one, is that all goods or all commodities were equal in importance, right?
Mm-hmm. Mm-hmm.
And another one is that there would always be peace and there would never be war.
Mm-hmm.
And but the minute one commodity becomes more important than the other, or strategically important to a country's safety or natural defense, or however you want to describe that, then it changes the whole game. And then once you're not in a period of time that is as peaceful or is not trending to be peaceful, it changes everything again. And so and that's where you kind of brought in the realpolitik and the real world and listen, guys, it's nice to think this way, but this ain't the way it's really going to work. So one of my questions to you is, have you received pushback either internally or even externally from clients that says, Michael, come on, man, I mean, you're being a little dramatic here, right? It's not necessary to say these things. It's not necessary to be so cavalier about we're heading toward, I'm just curious, like what has your experience from a personal level been in kind of saying these things and pushing these things forward? Because I think, again, from my point of view, you've kind of been on the vanguard of saying these things.
Well, thank you very much. Again, it's a great question, and it actually ties back to the previous part of the other question, which is what I do for the clients, which is try and tell them this. And in terms of the internal and external reaction, it's very, how can I put it? As an Englishman, it's very Marmite. If you know Marmite, it's a kind of a black, very oddly tasting spread that we put on our toast in the morning instead of marmalade, or alongside marmalade or jam. And even in the UK, where people grow up with it, you love it or you hate it. It's not something people can ever have a moderate opinion on, like I like it a bit. You despise it or you love it. And I guess I've provoked a very Marmite reaction, in that some people have absolutely seen the truth of it immediately. I think they tend to be people who just intuitively or personally understand realpolitik, and they're like, yep, that's the way the world's going to go. And you get a very, very violent counter reaction for people who like the system the way it is now, who are comfortable with the way things are now, and who would, frankly, rather tie you up in a sack, with a few puppies and kittens and throw you into the river. So you get a very, very differentiated response depending on how people look at the world.
Sure. And I'm going to do a little bit of a non sequitur here, and I'm going to have you tell everybody a little bit about where you grew up and then where you have lived and where you're living now, because I think that helps also to understand your point of view, and also maybe helps people understand why I think your view is a little different and perhaps a little bit more credible than others.
Okay, well, thank you very much. Well, I grew up in the UK, as you can hear from my accent, in a infamous UK town called Luton. We were recently in the Premier League. We just got relegated again, but we were there for the first time, which put us on the map globally. And in fact, in the local accent, it's not Luton, it's Luton. We don't have a T in it the way you say it locally. So if you ever meet anyone that says I'm from Luton, they either went to a very, very expensive school, or they're covering up where they actually come from, because you say Luton. You're from Luton. Okay. I'm a Luton boy. So Luton, let me put it like this. A few years ago, I went back, because I go back every now and then to see friends and family. And one of my great friends who I stayed in touch with, I said, how's the place getting on? He said, oh, it's really improving. It's not as stabby as it used to be. Which was an interesting adjective I hadn't heard before. It's not got a great reputation, and it sadly has deserved that bad reputation for quite a long time in some regards. It was a fairly dangerous place to grow up as a young man. When you're out and about on the town, you certainly knew what street violence looked like, and random street violence. Not in American standards where people do drive-by shootings. This is the UK, but still enough that it would put a crimp in your weekend and put you in the A&E at the hospital if you weren't careful. So that was the environment I grew up in. But obviously I was pretty intellectual and like reading a lot. But you had to fuse this intellectualism at home, going back and poring over books and having these obscure philosophical arguments with relatives, with going outside and keeping your head down and just not getting smashed to pieces on a Friday or Saturday night when you're out drinking. Then I got into economics pretty late because I was interested in politics and philosophy and history and lots of other things first. And I decided to just try and get jobs around the world. I didn't have much money behind me, didn't come from money. And I've lived and worked in 9 different countries around the world. I started off in Eastern Europe. I've lived and worked in Slovakia. I've lived in Russia, Japan, very brief stint in Sweden, Thailand, and then back to the UK, then I think Australia, Hong Kong, Singapore. During COVID, I was in Israel for a year. I was visiting there, and then COVID happened, and I got stuck there for a year. So there's been a lot of different kind of cultures that I've lived in, and a lot of different places that I've worked. But my view on life is always, if you're only looking at one thing, you can look at it fantastically. Then you find people who've maybe lived in 2 countries, or they've got 2 cultures, and they see 2 sides of the same coin. But if you've lived in 3, 4, 5, 6, you just see everything multidimensionally to an extent. And like joining dots in very different ways. So that's just a smattering of my background. I don't want to bore everyone with too much biography, but I think it gives a little bit of color to how I see the world.
Well, the reason I think it's important is because I think everybody knows the phrase, put yourself in somebody else's shoes. And it's always important to look at things, by more than just your own viewpoint. There's always 2 sides to every story, right? And there's actually probably 3 or 4 sides to every story. But I think the one thing that I have found, and it doesn't mean that this is the same everywhere, but when I talk to people, they're willing to put themselves in somebody else's shoes and look at it from their point of view. But the problem is they're still thinking like themselves. So yeah, they see it from the other point of view, but you still have your own personal preferences, ideas, belief systems. And what you really need to do is you not just need to look at it from their point of view, you need to think like them, right? And so one of my questions to you is, I'm guessing the answer is yes, but I would imagine that in living in all these places and interacting with the locals, you get to not only see it from their point of view, but if you're consuming the media in those places, or you're reading the news, or you're talking to people, you're not just yourself looking at it from that point of view, but you're hearing how these people think about the world. And I'm just curious how that has shaped your view, because you're British, or you're English. You're, for the most part, you're a Westerner, but you've been immersed in literally every part of the world. It must at some point start to blend a little bit, or it must make it more difficult to really identify with one place per se.
Yeah, that's certainly true, that you get to the point where you don't really belong anywhere. Like, I go back to the UK, and literally the syntax and the language is shifted in the decades I've been away. Everyone understands me, but young people have got a whole new vernacular coming through, and my cultural reference points are all desperately out of date. So people can tell immediately that you're kind of one of us, but you're not really one of us. And you gradually start to both connect and disconnect with everyone around you. Like I've spent years and years living in Asia, and I know pretty much how things click around here. But obviously, you're never really going to be one of the gang in the Asian locations. They can always see and hear that you are not local.
Sure.
But it means that you're kind of, as my wife put it to me once, you've become one of those plants that has air roots. There are certain species of plant that don't have to have roots in the soil. So I guess that's kind of how I've developed over the years. But in terms of understanding others, it is really crucial. And I think this is crucial for markets too. And I'll confess, when it comes to the cut and thrust of an individual market, that doesn't help me that much, right? Because you've got to understand your counterparty on that micro level in terms of how I know those guys are long or short. But in terms of the geopolitics of it and saying, okay, I've got a pretty good handle on how the majority in this country are going to see that particular issue and what they're more likely to do. You have to be able to do that because you have to understand how someone's going to respond to something. And that's very, very culturally specific a lot of the time. Like, is it a face-based culture or not? Is it a culture where if you say something, you really mean it? Or is it a culture where you can say something and do the complete opposite and no one will hold that against you? And even these can shift over time. Like our political culture in the West is completely different to how it was a couple of decades ago. But you have to track all these things and understand who your counterparty is to predict what they're going to do. And I think if I may just add one very, very brief point here, I think the clearest example of that professionally for me in the past few years, and it's so screamingly obvious, I'm actually embarrassed to bring it up, but I will, which is, as far as I'm aware, and if I'm wrong, again, I always put my hand up and mea culpa, I think I was the only person who put a paper out in the market space there, in public with my name on it in January 2022 saying Russia will invade Ukraine. Now, I didn't say it will, because you can't say will for compliance reasons, but I said market is severely underpricing the risk of, that's the terminology one uses, right? Yeah. And I was saying to everyone that they're going to do it. Now, why? They had all their tanks on the border, they had all their forces there. They said they were going to do it, and then they said, no, we won't, at the last minute. They'd done it prior the year before and then gone home. But if you read what they were saying to each other, they really, really meant it and what they were saying in Russian to each other. And my Russian's very basic, but I could still understand enough of the key points. And if you understood how Russia saw Ukraine, subsequently we all understand it. Like Ukraine is a subset of the Russian culture. We can't lose Kyiv. We can't lose these people. They're part of us who have drifted off. If you understood that, you knew they were going to do it. And everybody else kept saying in the same way they were telling me tariffs will never happen, protectionism will never happen. Like, we're past war. That's economically irrational. But the clients I warned, I said, look, if that's going to happen, you're going to see this, you're going to see that, gas prices, etc., etc. And a lot of it transpired. And that's where you can hedge in advance for these risks, which is a lot of what I do with my client base, and say, you're now pre-positioned where, touch wood, it doesn't happen, but if it does, you're safer than most. So that's a really good example, I think.
Well, so here's the other thing where I think you're a little different than some of the others, and why I've learned a lot from you is because I don't think identifying this potential coming conflict between the East and the West, and whether you want to call that, socially, economically, militarily, it's kind of all of it, right? But however you want to define that, the great game, so to speak, I think there's been a lot of people that have identified the potential for that. But most of the people, at least that I have come across, that have identified that dynamic almost always come to the conclusion that China and Russia and that side, quote unquote, is going to win. And the West, meaning, I don't know, Europe and the United States and the rules-based order, is destined to fall. And it's going to be a whole new dynamic. And in many ways, it's just assumed that is going to be the case. And you kind of identified all the same things, came to all the same, identified all the same trigger factors, but then you also came to a dramatically different conclusion. And you kind of came to the same conclusion that I did, which, you helped me come to the conclusion. I will say that. And so I will hold up my hand and say, yes, I am biased to your view because it resonates with me, but you helped me come to this view. What is it that you think allowed you to come to identify the same problems, see the same trigger points, but then come to kind of a not radically different, that's maybe a bit much, but coming to a different conclusion than many of your peers or the other people that are, looking at these same issues?
Well, I think it's down to two things, if you really want to distill it. The first one is it's very easy to be critical of your own culture because you know your own culture. Yeah. You know your own weak points. And boy, do we have them, by the way. And it is a movable feast. This is not a fixed forecast in time because decisions can be made on either side, which can, change the path of the future. Nothing's set in stone. But we know where we're weak in the West. I mean, my goodness me, you don't need to be any kind of expert to look and see where we fail. We don't understand the other side. So we project onto them this kind of, you can call it an Orientalist. I think Edward Said would have called it that once upon a time. Not that I like him very much as a thinker, but, you know, like an exotic other who we can kind of project our own thoughts and feelings and fears onto. And if you've actually lived in other systems and you've seen how staggeringly incompetent they are in different ways, I mean, better in some things for sure, and that'll be my second point in a second, but staggeringly incompetent in others, then you start thinking, really? Because, you know, I've seen backstage, you know, you see the backdrop and it looks amazing. And I've gone back and there's a guy picking his nose and scratching his ass. You know, it's not as good as you think it is. But the second point is quite concrete. And again, this ties in very much with your work, which has very much influenced me too, which is where the West is most likely to lose at the moment is we don't produce anything. We have a services-based culture, and that comes back to the earlier point, which is, what are you producing? It's like, great, I make nice apps that make cats look like dogs, and I've got hairdressers and pet psychiatrists. Well, fantastic. What have you got? I've got rocket-propelled grenade launchers and aircraft carriers. It's like, I think the other side's going to win. You know, send forward, you know, my cohorts of dog psychiatrists. So obviously that's not going to work. The issue then becomes when you look at what the other block, and we don't even know completely who's in the other block, but let's be generous with the geography. If you look at what they produce, it's nearly all commodities, apart from in China, where they produce masses of everything. So China is a completely different beast. And you look at us, we used to produce a lot, now we don't. And I don't just mean the US, I mean the collective West. And we also have a fair chunk of commodities, not as much as them, but a lot of them if you get the right countries like Australia in the gang, and Canada too. So then the only dynamic becomes, and again, ties back to protectionism, can we be sensible enough to have some kind of industrial and protectionist trade policy, which says we want to deal within an ideological block whereby we use our commodities as much as possible and start producing things again that currently are being produced over there, to make sure that, you know, we also have aircraft carriers and rocket-propelled grenade launchers and dog psychiatrists as well, as much as we can do, keep as much as both. And then the other side, the only way they could match that is to say, right, we now have to get all of those commodities into China and then sell them to who? So either the other side need to absorb all of China's excess capacity, at which point all of them will basically deindustrialize, which is why you're seeing countries like Mexico and Indonesia and Turkey and Thailand and India all putting tariffs on Chinese goods now. So it's not just us versus China, it's everybody versus China. So that's not working within the BRICS, even Brazil as well. Or is China going to have mass unemployment because it's got no one to sell to, at which point, you know, huge problems there. Or is somehow the deal going to be that they'll continue to sell everything to us even while we have our tariffs? And that doesn't make any sense. So when you look at what's produced and what's exported, you know, within the blocks and between the blocks, it's still easier with pain, but it's still easier for us to reindustrialize and to start to make things again than it is for them to share production within the bloc equally. So China and Tajikistan are, you know, equal partners rather than it being one-way trade. And that's my conclusion.
Well, so you know, I tend to agree with you, and I think part of the thing for me, and I'd be interested to get your thoughts on this, is that and it goes a little bit back to what you were saying about it's easy to, you know, hold the foreigners up on a pedestal because you don't really know the nightmare behind the scene, right? You know your nightmare at home. You don't know the nightmare abroad as well. But I think, you know, there's a tendency to think that the other side will be able to solve their problems quicker than we solve all problems. And one of the main ones that I come across, or one of the arguments that I come across, is that China will just sell all of their production either internally or to Tajikistan or to, you know, Russia or whoever it is. And I'll say, well, not at the same price. You know, they're not going to be able to, you know, sure. Can they sell it all? Number one, I don't think they can sell it all. But if they do sell it all, certainly at not the same prices as they're selling to the US. And the problem, is if you do sell all those goods, and you have to, I don't know, you have to sell $100 pair of shoes for 2 cents just to get the market to clear. Well, the problem is the China and really the whole world, not just China, but the whole world took out massive amounts of debt to finance the production. And it made sense when you're selling at $100. But if you're now having to sell at $2 to clear the market, well, then you have a lot of pain. And now that's not just central to China, but that's the example I use, because if China tried to sell all of their production internally, it wouldn't be at the same prices. And that's where I think China gets into trouble. I'd be curious what your thoughts on that.
Well, I think we need to have a related or a sidebar discussion to this, which is critical to understand, which is part of what we've already just discussed there is ideological, because we're moving away from a presumption that free trade is always the best, the globalization is always the best.
Sure.
And we're looking in the West for, what I called a few years ago, like the next normal, which is what is the ISM, like the ism, like socialism, capitalism, liberalism.
Yep.
What's the ism that tells us what we're allowed to do? And that's still our search. Now we're moving towards protectionism, but we're trying to find a better word for it because we don't like it. It doesn't sound good to people. So nationalism doesn't sound good, but we need to find something that's got those. Okay, so we're moving in that direction. China is absolutely, if you look at the ideology of it, and this is something I've done a lot of reading about. I didn't mention that in my biography, but my family was very left-wing when I was growing up, very, very left-wing, which in America is extremely unusual outside of a few circles, but in Europe it's pretty normal. So I'm really very well versed in Marxism, very well versed in it. Now, I'm not an academic in it because you could spend your entire life drowning in Marx, but compared to someone who just uses it as an insult to others, which is valid in some circumstances, I really know my Marx. So China is Marxist Leninist, in fact, and that's a crucial distinction, because when you bring Marx into it, you theoretically say the world looks like this, and Lenin is saying, and I'll put a gun to your head to make sure we get there quickly. And those are two steps we have to understand. But from the Chinese perspective and the Marxist angle, it's all about production. Marx was obsessed with physical production. And even though he talked about the fact that capitalists would compete against each other and the cost of goods will go down and down and down and down to the point where they go bankrupt, which is kind of what you're alluding to there. And that would be a crisis. And he didn't like what he called fictitious capital, which is basically stocks and assets and bonds where you make money from money, which is why China doesn't like them anymore, and property. Lenin had a related theory, which is when you start getting that spiral downwards, that it becomes an international war, because effectively then you have to start looking for third markets in other parts of the world and force them to buy from you rather than allowing them to industrialize themselves and sell a product back. And that's pretty much actually how World War I happened. I don't mean the trigger for it, but I think there's a lot of validity to it. It's not the sole answer for everything, because Marxism and Leninism doesn't have a crystal ball, but I think it's pretty powerful as an explanatory factor pre-World War I. So let's bring it back to China. I don't think, to be honest with you, that they have an issue right now internally, ideologically, with the concept of selling things below cost. Because while they have their capital controls, which are still pretty draconian, and while their dollar debt, which is significant, but it's a small share of the economy, and it's mainly held by property developers who, frankly, they're already letting go to the wall, and foreigners are going to take their hit. Most of the debt they have is internal, where they have an elastic money supply. If you look what their M2 has done compared to their GDP, I mean, you're laughing because you know what I'm talking about. So it's exponential.
Yeah.
So you can, while you've got those capital controls, you can subsidize the hell out of any production you want. And effectively, you're in an ideological race where they're saying, look, we're going to do this the peaceful way by just flooding everyone with stuff. And you can appeal to free traders, you can appeal to capitalists and say, look, here's low-cost inputs, and they win that game. Effectively, it still ends up in trouble in the long run, but in the short run, their global footprint goes up and up and up, and everyone else stops producing steel, etc., etc., etc. Or you turn around and say, well, okay, you're going to fight back. Well, we also have a lot of subsidiary products, shall we say, that we've managed to build that use steel and electronic components, if you catch my drift. And we don't want to do that, but obviously we're now better prepared for that than you are, because we've had that as a logical corollary of that particular impetus into physical capital, like the same way that America could convert Ford car factories into making aeroplanes and tanks during World War II, which it did at scale. So I can see what you're saying, but I think, and this is one of these cultural disconnects. It's very easy to put a capitalist lens on it and say they'll blow up, not with the rigidities that they've managed to put into the system. Now, is there a free lunch? No, there's no such thing as a free lunch. There are serious underlying problems, and the exchange rate of the renminbi potentially.
As I say, the exchange rate would be the potential outlet, right?
If you had a free market, but if you ever trade renminbi, as you know, the counterparty, one of them is always Chinese somewhere at some point. Yeah. So it's pretty rigid in terms of where it can go. So then I think the actual flashpoint, and this is what you see, and part of, again, what I was alluding to in the Great Game, is it becomes geopolitics. It's like how aggressive the geopolitics counter reaction to that is. How many countries can do what, as I said, Brazil, India, Indonesia, Mexico, Thailand, and the UK, and well, it's not the UK, the US and Europe, all talking about doing, which is, we won't buy from you. How many of them have to do it before you then get to that crisis point? And then how is it resolved from there? And I think there's a lot of corollary here with your milkshake theory. In fact, I think they're very much describing the same thing, but from different angles.
So somewhat related to this is that, we've talked about how historically protectionism was kind of the modus operandi for the whole world, really. It's really only in the last, half a century where free trade really reigned, as the common way of doing business, and perhaps that coincides with American hegemony. But I have a question related to this. Is number one, do you really think that the U.S. has been a free trade nation? I know that's the marketing of it, and I'll give you a couple of examples of why. That is the narrative. But behind the scenes, I think the U.S. has always been at least somewhat protectionist, or at least somewhat involved in the markets. I fundamentally don't believe markets are free, because I don't think governments will ever just step back and let the markets run without political, reasoning for interfering in them. And so I'll give you just a very simple example of what I mean here. In a free market, one country is free to choose who they buy certain goods from, right? And maybe 5 or 6 years ago, Australia had chosen to buy submarines from France. And they had gotten all the way down to, I think they signed the contract. And I'm sure leading up to this decision, Australia was considering buying, submarines from, France, Britain, the United States. There probably had a big RFP, and, people put in bids, and then it went to France. And then miraculously, 6 months later, that order was canceled, and they decided to go with the U.S., right? Now, I don't know exactly what happened there, but I have a really hard time believing that was just one day the Australians woke up and said, you know what, we really need to rethink this. I think maybe we'll buy them from the United States. And of course, France was extremely upset about this, shaking their fist, but what could they do, right? And I'm sure behind the scenes, then the U.S. said, listen, I know you're pissed off, but this is the way it is. Just get used to it. And by the way, we'll buy some more of your champagne, or whatever it is. They gave them something behind the scenes in some other way. So I guess my question, I think markets have been more free over the last 50 years, 60 years than they have historically been. But how much of the, the laissez-faire free market do you think actually existed versus what's projected to the world?
Well, I think you're absolutely right. I mean, I'm in Australia right now, so I'm very, very familiar with that point, and it is discussed here openly in the press, with people saying exactly the same thing. But we know what happened. Come on, let's not pretend otherwise. They have a healthy debate about it. I really think it depends on the sector that you're talking about, because national security obviously is very, very political by its nature. And I do think there were periods of time, and we're certainly not in one anymore, where America was well-intentioned and was trying to set up infrastructure like the WTO. And you did have this incredible backdrop, briefly, whereby, a tiny little country, I mean, let's pluck Micronesia. They're too small to really be an example, but they're a fun one to pick. Someone really, really tiny, who could basically say, right, I can take you, the US, to the WTO in an international trade court, and I can win and get you to back off and do what I want you to do. And at the same time, Micronesia could say, and now I'm going to put my goods on a ship from A to B to you, and there'll be no tariff when it goes in, and the journey all the way there will be protected by the US Navy. So there won't be any piracy or any Houthis blowing it up, and the Suez Canal is open, et cetera, et cetera. And you had basically, you had the cost of freight, but that was pretty low and not that variable. That was a lovely paradigm. That's completely gone, obviously. But I think there's another example I can give alongside submarines, that in the US, which has this self-image as being a free trader, I did until recently, every single year, as far as I understand, and please correct me if I'm wrong, does the Congress not pass the Farm Bill?
Oh, yeah.
What's the Farm Bill? Now, I believe there's a lot of subsidies that go in that. I think the farm sector kind of gets a bit of money. Now, I'm not against that, by the way, to be abundantly clear, right? Because Rabobank's very big in the food and agri sector, and it's not that we're lobbying for subsidies for anything, but it's crucial if you want to have a functioning farm sector to understand that it needs state support to a degree, not in terms of the individual farmer per se, but in terms of the infrastructure to make sure that you have that base. And that's also true, and this is the key point, for other industries. So if you want that to be true for your defense industry, you need it too. If you want it to be true for industry X or Y or Z, the same thing needs to happen. So I expect to see something between the Farm Bill and the example of the submarines you were just mentioning to become more of the norm in more and more sectors. And it will be up to individual industries to try and lobby to make sure on that good boy list versus the bad boy list if they want to do well going forward.
Yeah, I mean, and I can give you, I'll just give you another quick example. So I live in Puerto Rico, right? And everything that gets shipped into Puerto Rico has to come in on a U.S. ship. So it first gets shipped. If it comes from Brazil, first it goes to Jacksonville, Florida, and then it comes to Puerto Rico. If it comes from Colombia, first it goes to the U.S. and then it comes to the United States.
Can I just chip something in on that very quickly, just for a second, because this is a related point that I've been in. I wouldn't say debate about, because no one's actually debated it with me, but it's related to this quite strongly. I think you're referring to the Jones Act, where you have to have
that's exactly what I'm referring to.
There's a lot of people who are very anti the Jones Act, and I can understand where they're coming from, and I'm sure you would feel that frustration. Personally, when I look at it from the angle I do globally, I'm in favor of the Jones Act, but I think it's America that's undermined how things work by destroying its merchant marine. There should be hundreds and hundreds of American-owned vessels with American crews to make sure you have competition in that sector, bringing it back, which is what the Jones Act was put in place for. Because as we now see in the US Congress, there's bipartisan recognition of the fact that one of the other sectors that the US has abandoned is shipbuilding and the merchant marine sector. And if you were going to have, let's say there's going to be a big global war ahead, not a forecast, not a hope, fingers crossed we don't, okay?
There's going
but were it to happen, really, I really mean it. But were it to happen, where or how is America going to get the stuff from A to B? Yeah. And the answer is it isn't. It is not going to happen because you don't have a merchant marine. So you're either going to have to requisition Europe's merchant marine, or all the merchant marine owned by America but flagged in Panama or Liberia or all these other.
But don't you think that's the plan? But don't you think that's the plan?
Well, actually, yes, they passed some legislation, I think it was a year and a half ago, where they're incentivizing now to register back in the US again and pay very low tax if you can do it that way to try and move the needle. So I think they will have to re-requisition, but wouldn't it be better to be doing it in peacetime so you've got a stronger civilian economy?
So this is, okay, I want to focus on just this this is a perfect example of the chess versus checkers conversation that I often get involved in. Everything China and Russia does is well thought out, 3D chess move ahead. And the US is just jumping from one disaster to the other, no plan, nothing going on. And this is where I don't totally disagree with the disarray of the US. I think many things are in disarray. And I think many things, we have so many problems we couldn't even begin to list them all. But I also don't think it's just run by all complete idiots. Like, I do think the problem that you suggest, I think very, very smart people in the US government, maybe not in the presidential administration, but in the government, know about the issue that you're talking about. And I have a high degree of confidence that there are some contingency plans if it came to that, what they would do. And I think what you just suggested would be the line that they would go. They would requisition, they would say, hey, you have a private charter company based out of Panama? Congratulations, you're now in the US Navy, right? Or whatever it is. Or, you know, I think that there are plans that they have or things that they think that they can do to somewhat alleviate the problem, should that happen. But to your point, it would be much better had they run things efficiently all the time and not outsourced everything to someone else. And I think that's the problem now, right? They're trying to swing back the other way. There's many holes in the apparatus, and they're trying desperately to fix them. And this is where I think the US has a better understanding of the holes than the general analyst gives them credit for. And while they can't necessarily fix them immediately, I think that they can get them fixed better than most people think they can get them fixed, which I don't know if I'll be right or not, but my point is I don't think that China has all of their logistical issues and market problems totally dialed into a 3D chess move that they snap their fingers and everything's fine. And the US can't possibly solve any of these issues. I think each side is going to have massive challenges, filling these gaps, plugging these holes. But I just don't think that you should bet 100% against the US having the ability to do it. It doesn't matter whether you totally agree with that or not, but that to me is one of the biggest mistakes people make, is they think the US cannot possibly figure these things out. And I think they can get figured out, but I think it'll be very painful as they do it.
Well, look, I agree. I wouldn't have the overall view that I do if I didn't think that. I mean, honestly, on a daily basis, you read the news and you think, but I agree with you. But if I can segue, if I may, within the flow of the conversation, staying with this theme, but moving it to markets a little bit at the same time. So one thesis I've had for a couple of years now is that part of that transition, and it's going to impact on this sector too, don't get me wrong, it absolutely is what does that mean in terms of a macro response? What does that mean in terms of a fiscal response? What does that mean in terms of a monetary policy response? So part of the crisis within the West, and it's not just the US is in this problem, it's the West in general. And I've been hammering this point home, when I write Rabobank's Global Daily, like 3 days a week of 5 when I'm doing it, which is if you say you need high rates for that, you're going to blow things up. If you say you need low rates, you're going to blow things up. Different things. If you say you're going to have tight fiscal policy, you're going to blow a lot of things up. And if you say you're going to have expansionary fiscal policy, you're going to blow a lot of things up. So
sounds like there's going to be a blow up.
Oh, there's going to be a blow up. But then the way I've put it is this: if you logically say, well, we can't, high rates are a problem, and they don't boost productive capital investment. I think from an Austrian perspective, and most people watching will understand what Austrian economics is, I do think there's an incentive there that's important to have a high rate of return to incentivize investment and get rid of spurious investment. But they make it more expensive for the government to invest, and they're the ones who are clearly going to be doing some of this, because not all of this makes any money, right? It doesn't, unfortunately. China gets that. But if you cut rates back to zero, you're just going to have bubble-orama, nonsense investment. And it'll be cheap for the government to do it, but they'll be fighting for resources with everyone else who's inventing apps, as I said before, to make cats look like dogs, but now they'll flip them around to make dogs look like cats. This will be what they're spending their money on, which is idiotic. It doesn't help you in this global great game. And from a fiscal perspective, austerity is a catastrophe. We've seen it again and again and again. If you tighten your belt, it really, really just brings your economy down quickly, particularly when you've got massive investments. Like, you probably need to double your defense budget or 50% increase. So how are you going to do that and tighten your belt? And at the same time, if you just keep expanding treasury supply, ad infinitum, of course it's going to blow up eventually. Even the US will. So the long and the short of it is this: I think the only logical solution, and it comes back again to the shipping point and What do you do that's different? I think you have to have a combination of pretty high interest rates, if not maybe as high as now. Let's say 4.5 might be the floor. I don't know. That's pretty much our house view at the moment. And you also have to have tight fiscal policy for some and loose for others. So you need a severe spending redistribution where you're cutting back either on some programs, or you're downsizing in some areas, or you're even doing QE, printing money, openly printing money, at the same time as you have a 4.5 or 5% interest rate. So the Pentagon, for example, you print $1 trillion and you give it to them, but everyone else is borrowing at 4 or 5. So that's an interesting way to look at it, I think.
And not only that, but it could potentially be even more expensive if you're an entity outside the United States looking for financing. Yeah. Right? We haven't even talked about that yet. So, let's transition to that a little bit, because I want to make one point as we transition here, is even if the United States has always been not only ideologically, but actually followed the letter of the law and was a free trade nation, if other countries are not, then by definition, the U.S. isn't either. It's just that they're not deciding what the rules are. I think Michael Pettis recently wrote something about this, and I believe you comment. I think I saw you comment on it or something. And that is, if another country has trade barriers or has tariffs or is a mercantilist nation or whatever it is, if they are throwing roadblocks of some kind or another into trade between them and the United States, then the United States does not have free trade. It's just that the United States didn't choose that, right? And so the U.S. can either go to that country and say, hey, knock it off, or we'll knock it off for you, or they can institute their own policies and drive them that way. So I think regardless of whether or not the U.S. is a free market nation, for it to continue that way, they either need to use their military power to make other countries do that, or they need to, and that would cause all kinds of problems, right? Or they would need to institute their own tariffs and forego free trade, or institute their own trade policies that they determine rather than the other country determine. And so I think regardless of who is in the White House, regardless of whether or not who in the White House is a protectionist or not a protectionist, I'm pretty certain, nothing is ever certain, nothing is ever 100%, but the fact that we're headed towards a period of more protectionism rather than less, to me, seems like a fairly high probability. I think you agree with that. Am I wrong?
No, I completely agree. And to use an English analogy here, and an Australian one where I am, I'm now going to do what we call underarm bowling, like throw you a really, really easy ball back to you. Not only is that completely clear, but what should be just as clear is that if that happens from the US perspective, it has an enormous impact on the US dollar and the US dollar's availability outside the US. And just so few people are grasping that, no matter how many times you shout it, and we're potentially only months away from it starting.
Well, let's talk about Trump. Whether Trump gets into the White House is yet to be seen. But I would argue that even if he doesn't, for the most part, Biden has kind of kept Trump's policies regarding this. I think the political winds are such that whichever administration gets in, they're going to kind of have to steer towards more nationalistic policies rather than away from them. I don't think that's really a choice, to be honest. The degree, perhaps, and how they market it, perhaps, but the actual implementation of policy, I don't think would be dramatically different. But if we focus on Trump, because I think a lot of people think that Trump will get in, he will want the stock market to boom, so he'll cut interest rates, he'll pressure Powell to do QE, and this will automatically mean that the dollar will just fall, and it'll lose its status on the world stage. We'll have super high inflation, and the dollar's days are done. And I just don't think that's the case. And I think you and I had I don't remember if it was an email or a DM or whatever it was, but we were talking about how he's also talked about tariffs. Like J.D. Vance's speech, which is the only speech I listened to at the Republican National Committee. I didn't listen to Trump. I didn't listen to anybody, but I wanted to hear what Vance had to say. It's pretty startling that a Republican gave that speech at a Republican National Convention. I mean, that is historically not a traditional Republican speech, right? But it was very much in line with what, Trump believes. And, I think it was very clear from that, America comes first. If people are going to do business in the United States, they're going to pay to do business here. We're not going to finance everything for them. And, tariffs were a big part of it. And if Trump gets in and he pressures interest rates lower, but at the same time throws up tariffs, in many ways, not directly, but in many ways indirectly, those two things offset each other. And as a result, the supply of dollars outside the United States, perhaps the amount of dollars inside the United States grows, but the availability of dollars outside the United States probably does not. And that leads to the dollar going higher, at least on the international stage, right? Maybe not its purchasing power, but its availability on the global stage becomes less. And that causes all kinds of problems, because historically, the euro dollar and the dollar converted one. And I think that they still would, but it makes it much more difficult than it does now, right?
Well, you know what it will start looking like. And, you'll say, of course, it's going to start looking like China.
That's exactly right.
Because
I knew you would get that. But nobody's thinking about that.
Yeah.
Nobody's thinking about that, right?
No. But you have to mirror what you're seeing to fight it. Yeah. You can't fight tanks with hairdressers, as I said, and you can't fight mercantilism with free trade. And you can just whack up. If you could just whack up interest rates in America to like 7% and try and do a Reagan, big fiscal deficit, 7% rates, you would pull a lot of capital out of China. That's already happening to a degree. But your debt position now is too big or too worrying. Your fiscal deficit is too big. You're not starting from the base where you can do that like you could in the 80s. So you're going to have to do the hybrid kind of policy, logically. I'm not saying they will, but logically, that I've suggested. But internationally, people, it's very hard to get your head around. Dollar liquidity abundant. Everyone at home in America is ka-ching, ka-ching, ka-ching. So you'd have either an inflationary boom or an inflationary boom and it get too hot and bust, for sure. That's going on in the States. And then, you add in his other proposed policies like a tax cut and 10 freedom cities where people can just go and get free land to goodness me, you could have an enormous boom. And internationally, if you're a commodity producer internationally, no dollars available. So, the commodity price in dollars, where's that going to go? So just enormous dislocations for the physical economy. And then what does that mean for this emerging, putative coalition on the other side, an axis of Russia, Iran, China, plus friends? What are they going to do in this flux? And so it's the only one word you can cling to is volatility. 100% volatility.
Yes.
Everything we've just seen, like with the yen and the BOJ, that's a warm-up. That's what I'm telling people. That's a warm-up. Really.
It totally is a warm-up. Yes, I totally agree with you.
Yeah. And the dollar's going to go up.
So what the other thing, and again, this is just a total brainstorm, and I don't have a company in mind, but look, just as an example, I just want people to start thinking about things like this. So at the end of the day, of course, Trump is going to say certain things and he's going to do certain things, but then he will, of course, make exceptions because he's a deal maker, right? Okay, so let's say there's a tire manufacturer in the Philippines who all of this has happened, tariffs have gone up, dollar liquidity has gone down, and they're just having a hell of a time producing tires. But they have the opportunity, they have the raw materials, they have the know-how, but they just can't get it done. And what's to keep Trump from saying, you know what, I will let you import the raw materials into the United States, no tariffs. You can build the factory in Arizona or New Mexico or wherever it is, and we'll help you finance it, but you're going to do it in the United States. So we'll cut the tariffs for you, but you're going to do it, and Americans are going to get jobs, not just you're going to get jobs. So I don't know that that's going to happen, but to your point, Trump can Trump is the type of guy that would do things like that. And his policies are such that you could have liquidity inside the United States while it doesn't exist outside the United States. And that, in my opinion, this obviously goes back to my thesis a little bit, but I think that's one way capital flows to the US, is because I do not think dollar liquidity is going to be as liquid outside the United States as it will be inside the United States.
Completely agree. Let me just expand on that for a second, if I can, because I spent a lot of my time looking at this emerging potential geography or economic geography, because that's what matters for a lot of my international client base in terms of, what's the world going to look like, not just what does a financial market cross look like. So is Trump going to put a tariff on everybody and say, well, America can produce everything it needs at home and just build a wall around America and say we don't need anyone? That's not going to happen. That's almost certainly not going to happen. So let's just start logically. Is Canada going to be, under the American umbrella? Of course Canada is. So Canada's already in. Canada itself will then have to reciprocate with what America's tariffs are on others externally. Is Mexico going to be in? Probably, given how deep the penetration of Mexican exports are into the US market. Then Mexico, which is already doing it voluntarily, is going to have to mirror, again, America's external tariffs, to the rest of the world. So that's your USMCA. That's already a chunky block. Then let's look to Asia. Japan, 100% is going to want to be in on that. South Korea, probably too. Right now, if you look at the defense pact between the US and the Philippines, where the Philippines has moved away from China and moved back towards the US, is the Philippines going to be in? Oh, for sure. Vietnam, probably, although they've got a lot of Chinese investment in them, but then it's in Vietnam, so Vietnam gets to determine what happens to it. Australia, definitely. New Zealand, definitely. The UK, there's an interesting one, because we still want to get back into Europe with this new government. Are they going to be in on that if they're offered a deal? Yeah, I think they will. They've already hinted they would take that deal if it's offered.
Sure.
That's a pretty powerful block. Now, within that, you then got two choices. Do you say, as you just alluded to, everyone's technology and factories and raw materials come into the US with low tariffs? So Philippines rubber, for example, in your example, goes into the US, but you open a factory there and it's American workers doing it, maybe with robots and AI helping, but that happens. And they're effectively producing raw materials that go into the US, into this US machine, which creates a military which protects it. Or is it going to be the case that, no, you can still have those jobs, you can still have that production, it comes in tariff-free, which is a US trade deficit, but the capital has to be recycled in dollars back into the US. Either way works.
Or also you export to us, but you don't export to the people on the other side.
Oh, completely. No, that's right. Absolutely part of it. You're now within our zone with dollar recycling, and you don't touch the renminbi for trade commodity financing, and you're not going to sell to them. So one model is very similar to a kind of one phase of British imperialism, and the other one is very similar to the relatively free trade that we had up until the last couple of years with the US, but with a limited global footprint, and with people who the US absolutely trusts, and with the US probably also saying, we don't let our trade deficit with you get too big, because every time it gets too big, you have to buy another couple of F-35s to balance it all out. And we want a military base there so we can keep an eye on you to make sure we know what your foreign policy is going to be. And would that work? For sure. That absolutely works. But what does it mean for someone who's not in that group? That's where the rest of the world becomes really, really nervous, because they don't know what the hell they're going to be trading or pricing in, or who they can rely on and who's going to defend them. But I would rather be in the Western camp. I mean, what's Europe going to do in that? That's the big question, working for a European bank. Where does Europe sit? And I think Europe's answer to that is put your finger up your nose and pretend it isn't happening. Because, they're only just putting headlines out now saying, we need to plan for a Trump presidency. It's like, really? Really now? Now you're thinking.
Now you do. Yeah. Well, real quick, I want to make sure. I told you we were going to talk for about an hour, but I'm having too much fun. I'd love to go for another 15 or 20 minutes. Do you have time?
Sure. Okay, yeah, me too. Good fun.
Let's continue for another 15 or 20 minutes here. So somewhat related to something you just said, because you mentioned the empire. There was a quote that I wanted to make sure that we discussed, and that is, I believe it's from Lenin. I believe it was in one of your pieces of work. And I think he said something to the effect that imperialism is just the last stage of capitalism.
Yeah.
Do I have that right? Is that the right quote?
Yes, you're right.
Do you agree? Do you agree with that quote?
Yeah, I mean, I kind of alluded to it already when I was referring to the pre-World War I tensions, because Lenin wrote that in 1916, and he was leaning on a book written by a guy called Hobson, who was actually a British liberal, pro-free trade, pro-empire thinker. He wrote it in 1902. He was making a similar kind of point. And he was basically saying that the way capitalism was developing back then in the early 20th century was you were getting more and more big monopoly firms, because like that Fordist economy of scale was starting to be seen pre-Ford, in lots and lots of places. And at the same time, you were getting big monopoly banks that were finally emerging too. And they were starting to fuse together into these big financial trading houses. And local demand was absolutely saturated. Like they couldn't squeeze any more out. And you didn't want to start giving people pay rises, because that's not the way that the capitalist system wants to work. So it's like, where can we get new markets? And it became a race to divide up Africa, Latin America, Asia. I mean, that's abundantly clear what happened in that particular epoch. And it was very much Germany's attempt to try and rival the UK, and then to try and rival it militarily at the same time, that ended up with the tensions that led to the accident that became World War I. And you can even trace this with actual economic data. If you look at 19th century tariffs, for example, they were really high early on. Then the UK embraces free trade under its empire, where they're the only industrial power. And everyone else says, oh, well, free trade is the answer. And all their tariffs came down. And then 20 or 30 years later, they're like, hang on, all we do is buy British products, and your gunships are going around the world telling us what to do, and we're not actually developing. Let's put tariffs back up. And they start going back up again pre-World War I to try and get that industrial impetus that then pushed back. So I think Lenin was right. What's interesting is he also shot down a rival theory from another Marxist that was going around prior to that, Kautsky. And he'd argued for something called ultra-imperialism. And he came up with the thesis that what would happen is all the empires pre-World War I would basically find a modus vivendi where they would exploit the rest of the world together, a bit like George Orwell's 1984, where there's no escape. And I think you will still see people pushing for that in a different kind of format, arguing that America needs to make a deal with China and with Russia about how to carve up the world and, everyone's friends together. But trust me, that's not going to be a level playing field if that does happen. But Lenin said, no, it's going to be a fight to the death.
Yeah. So what I think would be fun in the last, kind of 15 minutes here is I think a lot of people think that all I do is sit around and figure out how the US is going to win and how China is going to lose, right? Because I'm so focused on the US. It's funny, but, that's a tangent I won't go down right now. But what I thought would be fun is I think you will agree that it's not just the US that's trying to figure out how to bring stuff back to their markets and kind of, come up with their own way to make America great again. China's also doing it too, right? China is putting policies in place to wall itself off from the West and keep the US from exploiting them in whatever ways. And so what I thought might be kind of fun is if we sat here and talked about what China is doing, what they're doing well, and what could they do that could have them rise and while the US falters. Because anything's possible. I'm the first to admit that I could be wrong. But if you're open to having that little brainstorm session,
sure.
I'd love to do that.
Sure.
Because obviously what China has is great manufacturing capability, right? They have incredible human resources that allows them to man the factories, but not only that, but just throw incredible manpower at whatever problem comes up, right? So to me, that is their, and I think, and I've never lived there, and I don't know the people intimately. I don't know. Have you lived in China?
Well, Greater China, yeah.
Okay.
Hong Kong.
So, my perception is that they're very much behind the rise of China. That's kind of their manifest destiny, right? They've made great sacrifices as China rises onto the world stage. And as long as China continues to rise, I would argue that they would probably continue to support Xi's policies. As his policies have started to wane a little bit, I think there's more social upheaval within China than is commonly understood. But again, if he can continue the rise, if their standard of living can continue to rise, I would think that, not only their human resources from a physical labor standpoint and a manufacturing standpoint, but from a common belief standpoint would be one of their advantages. What other things do you think they could do in this scenario that we've laid out? And we've talked about some of the things the US can do, but what are some of the things that China could do to have their side, quote unquote, do better than the West?
Well, I mean, they have multiple strategies that they could employ, because if we start from where we are today, I think it is important to recognize that actually there is a lot of discontent right now, because the Chinese model that we've had up until a few years ago was one in which, yes, you had manufacturing muscle, but you also had like an emerging services sector, and you definitely had a huge property bubble, which I'm sure you're aware of, and most people are aware of. And a lot of people were getting very rich from that. And she has absolutely understood, and I think very significantly, and I say this all the time in different formats, I think correctly, and I wish we would take a leaf from his book, said that actually property shouldn't be a speculative asset class. A home should be to live in rather than something to flip or invest in. And it's more important to have affordable homes as a solid base for families and for future and for roof over your head than as a financial asset. And I personally agree with that a lot. I think the world would be better off if everyone did that. But that's left an awful lot of people feeling very, very sour. And if you look at the fact that the service sector and the housing market and that froth is no longer mopping up graduates and no longer kind of offering all these channels for easy money and an easy ride, you have a tendency now for a couple of years already for what people call lying flat, where the young just don't spend money. They just deliberately stay at home and spend as little as possible and say, what's the point? So, and instead of putting all my energy into pushing back, I'm just going to do nothing. I'm just going to sit here and do nothing. I'm not going to go out. I'm not going to date. I'm not going to get married. I'm not going to have kids. I'm not going to buy anything. Now, that's a pretty bad position to be starting from. So, how do you deal with that? Well, on one hand, you could say, right, they could reflate the bubbles again. And every Bloomberg editor and story writer would be thrilled. Property's going back up. Chinese stocks, time to rotate back into them. Yeah, temporarily, that would do all that. But, she has openly said, I don't want inequality in this country. I want to level down and level up at the same time. And it's more important that we all stick together than we just have growth, excess growth for growth's sake. So that's not going to happen. That's not going to happen under Xi.
Yep.
So then the only other path that they've got, really, I think, is to continue to batten down the hatches, which is what they're doing at the moment, which is a very regimented economy where the state is playing a larger and larger role, but to try and leverage in as much foreign capital as they can, as much foreign technology as they can. And there are still Western firms queuing up to do it. You wouldn't think there would be after everything that's happened. There still are, particularly European firms. There's still US tech firms who are very excited about going over there, despite the fact that firm after firm finds that their technology is cloned and is sold back to them and they go out of business. Keep doing that. Keep, as I said, building your industrial production muscle, and eventually get to the point where you think that the other side doesn't have the guts to really say we're going to introduce the changes that we were alluding to prior from a policy perspective. And you get voters saying, no, I won't deal with 5 years of inflation while we make the transition back towards local production. Or you get Western businesses saying, I don't want to pay workers more to onshore. I like the fact that I've got the whip hand over the workforce. Even if it means that China rules the world, I don't really care. That's the world I prefer. So I think they're already onto a potential winning strategy as it is. The only alternative would be to reform themselves to look more like the US, more of a consumer, more services based, which is obviously what the financial sector would love. But
can they do that? Do you think they can do that? Because I agree with you. If they really focused on developing their internal market and put policies in place to do that, I think that would probably be one of the strongest things they can do if they can pull it off. I struggle to figure out how they can actually pull it off, but I would agree that would be one of the strongest, if not the strongest things they could do if they could raise their internal domestic economy.
Well, remember, it's kind of 3D chess again, because on one hand, they have to do that by prioritizing consumption over production or over supply. In the West, we don't have enough supply. We have too much demand. They have too much supply, not enough demand. We're a mirror image because it's a balance sheet globally.
Sure.
And again, going back to Michael Pettis, who is the go-to guy on explaining these balance sheets, You know, that involves changing your whole political economy. You've got to remove all the subsidies for supply. So you've got to have local governments who stop building infrastructure for free for companies so that they can produce more cheaply. And it's very hard to change all that and to give the money for people to spend. But even if they did,
and if they did that, it would raise social problems from one group that are currently happy, and then they would be pissed off because it's being taken from them, right?
Well, that would happen for one. But the other thing, again, keeping it three-dimensional, is let's say you do that, which really pushes up your domestic demand. You're going to be importing a lot more again. Because at the moment, Chinese imports have really dropped off.
Right.
And what does that make you vulnerable to? The US dollar. What does that make you vulnerable to? International commodity prices. So what does China not want to do is to increase its vulnerability. So can it do it? Sure. But for ideological reasons, if you don't want to be as vulnerable to the dollar and commodity prices and imports, you can't boost your domestic consumption unless every element of your supply chain is either domestic or coming from a country who's in your bloc. And then we're back again to the great game of who's in my bloc, who will take the renminbi for my commodities, which means that they're irrevocably locking themselves into this particular political bloc and they're not going to trade with America. And so you don't solve one problem until you solve all the problems.
And what do you make of, there's obviously been a lot of military saber rattling, and of course Taiwan gets thrown out there every couple of weeks, if not every couple of days, as a potential flashpoint. If you're a Chinese general and you're looking at both the internal situation and the external situation, do you make the gambit that the sooner we go, the better, because if we wait too long, we might not be able to go at all? Or do you hunker down, lock down the economy in the country for 5 or 10 years and, make your play in the mid 2030s?
Well, I'm no military expert, and I want to make that abundantly clear, because everyone likes to be an armchair general, and there are areas where I think I can talk with some degree of competence, and this is not one. But if you talk to and read the guys who are, opinion appears to be split, 75-25, that there is a serious risk, which tells you that it's worth thinking about and hedging mentally at all times rather than presuming that can never happen. But the only kind of piece I'll add on top, which feeds back to everything I've already been saying, which is if you understand that Xi is the only decision maker, and he's the only decision maker, no general makes that call.
Right.
And if you understand that Xi is an absolute dyed-in-the-wool true believer in Marx and Lenin and Mao and himself, and you understand that Mao was a true believer in Lenin, and Lenin believed that late-stage international capitalism, ends up in war, and that the capitalists will eventually come for you, you are absolutely paranoid because you believe they are coming for you. It's as simple.
Well, that's
as
where
that.
I was kind of going with this. If you take Lenin's quote that we talked about earlier, and then you apply that to China thinking about the capitalists, how could you not expect them to come for you?
Well, the irony is that the policy that China is pursuing is a Leninist policy of flooding the world with excess production. So it's actually a capitalist style problem that they're flooding the world with. But as Mao said, society is full of contradictions. That's how you get out of it as a Marxist, Leninist, Maoist. You just say contradictions, and then that solves the intellectual argument for you. But yeah, it certainly suggests that from a realpolitik perspective, again, he's probably thinking, this ends badly. And if you look at his own stated belief over and over again that the West is extremely weak at the moment, and that there's absolutely no way that it's going to get any stronger, that there's only one way, which is collapsing down, which is the Marxist view. Maybe you say you just wait. But if you think it's the Leninist view, which is they can have a war before they go down, then you have to look at your tactical opportunity versus your strategic threats. And as I said, I think it's a tail risk you have to consider, purely because people who have competence in that area, which I don't, say that it's something to consider. And don't fall into the trap of just saying outside my area, outside my culture, outside my remit, I won't think about it. Listen to someone who, not me, but someone who does think about it and what they say.
Well, I will say, Michael, I think everybody should listen to what you have to say. Not only are we running out of time, but I just got a thing popped up on my computer that I'm running out of storage space of all things. So I think we probably do. Yeah, listen, I know you and I could sit here and talk for 4 hours and we wouldn't take a breath. So we'll have to have you back at some point, but I really appreciate you taking the time to spend with us. I hope the Milkshakes Markets and Madness audience has enjoyed this, I would highly recommend that you follow Michael to the extent that you're able to do so. Michael, what's the best way for people to, stay in touch with some of your thoughts?
Well, obviously, all my stuff is for Rabobank clients, but some of my stuff is available on my LinkedIn site. If you look at me, Michael Every at Rabobank, and also on Twitter, or X, my handle is @the Michael Every. So follow me there. Let's have a conversation, and let's keep the ideas flowing.
Sounds good. Thanks again, and I really appreciate it. And to everybody out there listening, I hope you enjoyed this, and we'll be back again next